Welcome to Compasscope. Our research platform covers over 1,100 public companies. Each week, we share one of our active research files here in dialogue format.
In the 3 seconds it takes for your travel search results to load, there's this invisible, just hyper-complex industrial machine already at work. I mean, before you even see a price for, say, a weekend in Rome or a cabin in Aspen, an algorithm has already calculated the exact profit margin of your click.
Right, yeah.
It's cross-referenced your profile against, like, 3.6 million global properties, and it's decided whether you're more likely to book a boutique hotel, a vacation home, or maybe a bundled flight.
And that split-second calculation, that is the actual battleground of the modern travel economy. You know, it looks completely seamless on your phone, but underneath, it is this multi-billion-dollar logistical war.
Oh, absolutely.
We're talking unified tech stacks, massive data lakes, deeply integrated software partnerships. You're basically looking at a fundamentally operational challenge that's just, disguised as a consumer website.
So welcome to our deep dive. Today, we are cracking open the hood on one of the titans orchestrating that massive machine, which is Expedia Group, Inc., or ticker symbol EXPE for you tracking at home.
Yeah, a massive player.
Definitely. And our toolkit for this deep dive features a really comprehensive new research report from Compasscope, and we're pairing that with the granular, boots on the ground reality from Expedia's hot off the presses Q1 2026 earnings call transcript.
Lots of fresh data to dig into.
Exactly. So your mission today as a listener is to figure out the mechanics of how this behemoth actually makes its money, who it's fighting in the trenches, and whether its strategy is actually holding up in what is, frankly, a wildly shifting global landscape. Because, well, to understand Expedia today, we first have to map out its territory. Right.
Right, yeah. Because it is far from the single flight booking website it was back in the early 2000s.
Yeah, it's not just a website anymore.
Not at all. You really have to view their footprint across two totally distinct divisions. So the first is their B2C, or consumer-facing marketplace. And that division is anchored by three main pillars.
Okay, lay those out for us.
So first, you have brand Expedia, which serves as the universal aggregator. The place you go to bundle flights, hotels, rental cars, maybe travel insurance, all into one massive cart.
Right, the classic Expedia experience.
Exactly. Then you have hotels.com, which, as the name implies, is laser-focused on traditional lodging. And finally, there's Vrbo, which is their pure-play vacation rental space. That one focuses heavily on entire homes, family trips, group travel, that sort of thing.
Okay, so those are the billboards we all see on the highway, basically.
Yeah, household names.
But the Compasscope report spends a massive amount of time on their second division, the B2B distribution side, specifically something called Expedia for Partners and their Rapid API. So how does that actually function out in the wild?
Well, think of the Rapid API as a massive set of invisible plumbing. So let's say you log into your Bank of Montreal Air Miles portal, right? You want to book a trip using your credit card points.
Okay, sure. I do that all the time.
Right. And you never actually see the Expedia logo there. But when you hit search, that bank portal is sending a request straight through Expedia's API. It's querying their real-time inventory of 3.6 million properties, fetching the pricing, and locking in the reservation right on Expedia servers.
Oh, wow. So they're essentially just white labeling their entire infrastructure.
Exactly. They rent it out to airlines, financial institutions, corporate travel platforms. It's huge.
Which I think brings us to the operational pivot that really seems to define their current era. Because between 2020 and 2024, they essentially halted their traditional momentum to just rip the whole company down to the studs.
They really did. It was a massive undertaking.
Because for years, Expedia operated as this sort of loose confederation of acquired companies, right? Travelocity, Orbitz, Vrbo, and they were all running on these siloed, completely legacy tech stacks.
Yeah, they were completely disconnected.
But then they spent 4 years migrating all of those platforms into a single unified data and loyalty ecosystem called One Key. So, okay, let's unpack this. Is their unified platform essentially like a massive car manufacturer taking 3 totally different brand bodies, like a minivan, a sports car, and a sedan, and just slapping them on the exact same underlying electric chassis to save money?
I love that. Yes, that is the perfect way to visualize it. What's fascinating here is that when the data was locked in those separate dialects, the company was essentially blind to its own scale.
Oh, interesting. How so?
Well, by migrating everyone into this one shared data lake, their machine learning models can finally recognize that, hey, The person who clicked a Vrbo ad for a beach house in Florida is the exact same person who is currently searching for flights on brand Expedia.
Ah, so they aren't accidentally bidding against themselves in Google search auctions anymore.
Precisely. And it allows them to deploy new technology horizontally across everything. I mean, if they build an AI customer service agent, they don't have to build it 3 separate times for 3 different brands.
Right, that would be a nightmare.
Exactly. They build it once on the shared chassis, to use your analogy, and they deploy it across the entire network. So out of their 250 million annual service interactions, over 30% are now fully handled by AI.
Wow, 30%?
Yeah. And they use these unified algorithms to automate the onboarding of new hotel partners. They personalize search rankings, and they just systematically drive down their operating costs across the board.
Okay, but knowing the sheer size of that unified engine, naturally that brings up the competition, because they certainly aren't the only ones heavily armed in this space. Now that we understand the size of this chassis, who are they actually drag racing against? Can they win?
Well, the most formidable direct rival is definitely Booking Holdings. Booking really commands the European market, which historically yields much higher profit margins.
Right.
And they also operate with a much simpler brand architecture. You know, they channel almost all their energy into the single Booking.com interface. But Expedia counters that with a really dominant North American footprint and, as we mentioned, a much larger, more aggressive B2B arm.
Got it. And then on their other flank, they have Airbnb, right? Which just has this undeniable structural cost advantage.
Oh, for sure.
I mean, Airbnb relies far less on paid marketing because, well, their brand has become a verb. People just open the app organically. And Vrbo competes directly in that alternative stay market, but you could argue it lacks that same sort of organic, absolute cultural dominance.
I think that's fair. Which then leaves the most existential threat hovering above all of them, which is big tech.
Google, Meta.
Exactly. Google, Meta, and increasingly AI answer agents.
Yeah.
They control the absolute top of the discovery funnel. The underlying fear across the whole travel sector is disintermediation. The fear that an AI chatbot will simply intercept you, the traveler, recommend the itinerary, and completely bypass the online travel agency entirely.
Okay, but if I push back on that a bit, I look at that landscape and I see Expedia stuck in an incredibly messy middle. I mean, if Booking is dominating Europe's margins, and Airbnb has the absolute cool factor for rentals, and Google owns the top of the funnel, what keeps Expedia relevant to you and me? Why don't they just get squeezed out?
That's a great question. Their ultimate defensibility really comes down to diversification and the brutal reality of fulfillment.
What do you mean by fulfillment?
Think about the mechanics of travel from big tech's perspective. Sure, Google or a new AI startup might happily summarize the best neighborhoods to stay in Rome, right? Or they might even display the cheapest flight routes. But they absolutely do not want the operational headache of handling a frantic customer whose flight is grounded in Frankfurt at 3 a.m.
Oh, yeah. They just want the lucrative advertising click. They don't want the messy customer service escalation.
Exactly. Expedia's moat is that they are the operator in the trenches. They offer the entire spectrum: flights, cars, traditional hotels, alternative homes, and they possess this vast localized fulfillment network to actually execute those complex itineraries.
That makes a lot of sense.
Yeah, and about 2/3 of their total bookings come from direct traffic. That means people intentionally opening an Expedia Group app. That direct relationship, combined with the capability to physically fulfill a trip, that's what insulates them from simply becoming an invisible back-end database for the search engines.
Okay, so since they are facing this multi-front warfare, what is Expedia's actual battle plan for growth over the next decade? Because the Compascope report outlines their financial targets, and this is where it gets really interesting to me.
That's very revealing. Yeah.
They're targeting a moderate 5% average annual revenue growth between 2026 and 2035, but pairing it with durable low 20s EBITDA margins. Now, I mean, in the broader tech ecosystem, targeting only 5% top-line growth sounds incredibly conservative, almost like they're just conceding market share.
It does sound low, but it actually signals a fundamental shift in their corporate philosophy. They have completely abandoned the pursuit of pure, unprofitable volume. They are intentionally capping their top-line growth expectations so they can focus relentlessly on profitable growth. They want high-margin bookings.
Okay, so how do they mechanically achieve that? How do you expand margins while only growing revenue at 5%?
So it relies on 3 main operational levers.
Yeah.
The first is using that B2B engine we talked about as a sort of Trojan horse.
Okay.
So if brand Expedia struggles with consumer recognition in a new international market, they don't go out and waste billions on localized billboard campaigns. Instead, they partner with a dominant local super app and just power its travel section quietly via the Rapid API.
Capturing the demand without the marketing spend.
Exactly. Now, the second lever is cross-selling Vrbo inventory on the core Expedia platform. And that initiative just reached a $1 billion annualized run rate.
Wow, so proving that cross-selling actually works. You can pitch a vacation rental to someone looking for a flight.
You absolutely can.
And so the third lever has to be the AI ad bidding stuff you mentioned earlier, right? The productivity gains.
Yes, that is the most critical driver of their margin expansion. See, the legacy travel agency model was basically spending an absolute fortune spraying performance marketing across the internet and just hoping to capture a booking.
Right. Spray and pray.
Exactly. But because Expedia now operates on that unified data stack, their AI can calculate the exact return on investment for individual ad placements in real time. They are systematically slashing inefficient marketing spend.
And reallocating it.
Yeah, moving those dollars to high-converting channels. And simultaneously, they use machine learning to personalize the actual app interface for you. It's generating record attach rates.
Wait, what does attach rate mean in this context?
It means the AI is so accurate at predicting your preferences that you buy the flight and then you immediately add the recommended hotel.
So what does this all mean for the bottom line? They aren't trying to double their user base overnight. They're essentially trying to use AI to squeeze a little more profit out of every single booking you make.
If we connect this to the bigger picture, yes, absolutely. And that margin expansion strategy is exactly why they're heavily buying back their own stock. I mean, they announced a new $5 billion authorization on the latest earnings call.
Right, because they are generating massive free cash flow by running this tighter, much more efficient ship.
Exactly. I mean, they've reduced their outstanding share count by 24% since 2022. It is a massive return of capital to shareholders, funded entirely by simply running better.
But, running a tighter ship sounds fantastic in a PowerPoint presentation. The reality of executing a multi-brand, AI-heavy integration while aggressively buying back stock, that feels fraught with hidden icebergs. Let's talk execution risk.
There are definitely risks.
I mean, juggling 3 consumer brands, a massive B2B business, and rewiring your AI tech stack all at once, that feels like trying to swap out a jet engine mid-flight while serving drinks to the passengers.
That's a great way to put it. The strategic complexity is, without a doubt, their primary internal vulnerability. As we noted, Booking Holdings benefits from a hyper-focused single-brand strategy, but Expedia, they have to orchestrate Brand Expedia, Hotels.com, Vrbo, and its B2B partnerships without cannibalizing itself or confusing the consumer.
Then we really have to talk about the hidden tax of all this AI integration, token and compute costs.
Yes, the AI inflation.
Because every time an AI agent summarizes a complex multilingual customer service dispute or dynamically repackages search results, that burns computing power. It costs money.
It does. The core tension in their operational model right now is a race. It's a race between efficiency gains and rising tech infrastructure costs. To maintain those low 20s margins, the financial savings they generate from, say, cutting human headcount has to significantly outpace the millions they're paying in compute costs to service providers.
Right. If those token bills inflate faster than the efficiency gains, the whole margin thesis collapses.
Exactly. And on top of that, the B2B side introduces its own margin pressures. I mean, B2B brings in fantastic volume, but partner commissions can really water down the overall profit margins if they aren't managed carefully.
Because you have to share the revenue with the bank or the airline using your API.
Right. So the Compasscope report highlights that this multi-layered complexity makes Expedia's execution risk moderately higher than Booking's, though it's fundamentally different from Airbnb, which faces intense external regulatory risks like city bans rather than internal operational tech hurdles.
Okay, so let's look at the actual scoreboard. How is that mid-flight engine swap holding up? Let's pull from the hard data in their Q1 2026 earnings report to see the reality on the ground.
The numbers are pretty striking.
Yeah. The transcript reveals a massive quarter on the surface. Gross bookings were up 13%, total revenue was up 15%, and their consumer brands grew by 10%, which is the fastest in 12 quarters.
But the most validating metric for their whole strategy was the profitability. EBITDA margins expanded by nearly 6 full points. It's their highest Q1 margin in 15 years.
Okay, here's where it gets really interesting to me, and I want to push back on this a little. Because travel took a sudden hit in March, right? The executives noted that January and February were strong, but March hit a wall due to macro headwinds.
Right. Travel is notoriously sensitive to geopolitical shocks. The conflict in the Middle East sparked cancellations, which impacted their B2B outbound business. Plus, travel advisories in Mexico depressed consumer bookings.
Yeah, so those events dragged bookings down by about 2 percentage points. Fortunately, April showed a rebound. But if travel took a hit in March, how on earth did they still post their best Q1 profit margin in 15 years? Did they just panic and slash their marketing budget to save the quarter?
It looks like that on paper, but no. The transcript shows direct sales and marketing actually dropped by 7%, yes. But the executives were very clear. This was not a panic cut.
Okay, then what was it?
Because of that unified data lake and AI marketing optimization we talked about, they simply stopped spending on unprofitable clicks. They let the AI dynamically cut bids on bad search terms in real time, so they generated more consumer bookings while spending 7% less money to acquire those customers. That is structural efficiency.
Oh, wow. So not a Band-Aid.
Exactly, not a Band-Aid at all.
And while navigating that macro volatility, they also announced a massive recent win, the Uber deal. They became the exclusive hotel partner for Uber. How does that actually work?
It's a brilliant maneuver to bypass search engines entirely. They're injecting Expedia's B2B hotel inventory directly into the Uber app. So you land at an airport, open Uber to hail a ride, and the interface naturally prompts you with a hotel booking option powered quietly by Expedia.
Oh, so they capture you right when you need it without paying Google a dime.
Exactly. They acquire a highly qualified lead in a daily use ecosystem.
Which brings us to the dashboard dials. Given all these moving pieces from Uber partnerships to global geopolitics, what are the specific keys to watch moving forward?
Well, the central question for the next few years is the evolution of AI answer engines. We really need to watch whether platforms like OpenAI or Google's Gemini shift toward fully integrated checkouts, or if they stick to CPC cost-per-click advertising models.
Right, because if an AI can just execute the transaction directly inside the chat interface, Expedia loses its front-end brand value.
Exactly. They'd just become a dumb pipe competing on wholesale pricing. But if the AI sticks to a sponsored link model, the established OTAs thrive because they have the deepest pockets for ad bidding. And interestingly, OpenAI recently scaled back some commerce integration, hinting the market might lean toward the ad model, which heavily favors Expedia.
Okay, any other metrics we should be watching?
Definitely the health of the U.S. consumer, since the U.S. is their profit engine. Also, keep an eye on Vrbo's performance versus Airbnb. And lastly, macro volatility. Travel demand is highly elastic. Airfares, inflation, unexpected shocks, they can flip the script instantly.
So if you're a listener actively following this space, what is the single loudest alarm bell that could ring in the next couple of quarters?
This raises an important question, and it goes back to something we discussed earlier. The loudest alarm bell would be a degradation in their direct traffic.
Because if that 2/3 direct traffic starts to drop,
it means travelers have stopped going directly to the Expedia app and are relying entirely on AI bots or Google. And if that happens, Expedia's customer acquisition costs will skyrocket and it'll crush those beautiful margins they just built.
it is such a delicate balance. So just to recap the journey today, Expedia has totally transformed from this loose collection of brands into a unified, highly profitable B2C and B2B machine, but they face stiff competition from Booking, Airbnb, and the looming shadow of big tech.
They've done the hard internal work, but the external environment is tougher than ever.
Definitely. Which leaves us with a completely new angle to mull over as we wrap up today. We spent a lot of time analyzing how AI optimizes Expedia's internal logistics, right?
Yeah.
The back end. But think about the front-end interface of the future. If AI models eventually know us so well that they can dynamically package flights, alternative homes, and local tours on the fly, essentially acting as a personalized micro-OTA for a single user, will giant legacy brand names like Expedia or Booking even matter to you a decade from now? I mean, or will they just become invisible back-end inventory pipes powering the AI in your pocket? It's something to think about. Thank you so much for joining us on this deep dive. Keep asking questions, keep looking under the hood, and stay curious.
This content is produced by Compasscope.com. For more than 1,100 public-listed companies, find detailed company research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.